Welcome. My name is Sasha Moore, and I'm delighted to moderate today's event on behalf of the leading boutique aggregator National Lending Group, otherwise more commonly known as NLG. We're holding this webinar to provide an overview of an exciting new initiative, the Accountant Broker Partner Program. We also encourage you to feed any questions you have through the chat function, which we'll keep an eye on throughout today's webinar, and we'll address these at the end of the session. Please also feel free to address these questions to a specific panel member. And on this note, it's my pleasure to introduce you to an esteemed panel today, including NLG executives, brokers, and accountant partners. So without further ado, let me introduce you to Steve Lake, Director of Partnerships at NLG.
Hi, Sasha. Hello, everyone.
Hi.
Good afternoon.
Good afternoon to you. We also have with us Jim Colm from Lending Loop. Welcome, Jim. We have Matt Connell from 10th Avenue.
Afternoon.
Hi, Matt.
How you going?
We have Moeen Khan from Concept M Chartered Accountants.
Hello, everyone.
We also have Brian Willett here from FinCare Finance.
Hello, everyone.
And along with him, Lauren Marsh.
Hello.
So thank you all for joining us today, and thank you to so many participants for tuning in as well. We hope that you find this session really informative. So let's kick off. So Steve, we're going to start with you. Just a little bit about NLG for those who aren't familiar. If you can just maybe go through in a nutshell, sort of a little bit about NLG's vision, mission, and value proposition.
Thanks, Sasha, and hello again, everyone. Our vision is really simple. It's to be recognised as the leading provider of finance and broking services to accountants, and also the leading partner of the brokers in Australia. We see, I guess, our value proposition is that we're not a typical aggregator, and we do things very much differently to your standard aggregator. So our difference is that we are completely invested. So NLG is a boutique aggregator. It's completely invested in its people. We're invested in helping you evolve. We're invested in facilitating unrivaled growth opportunities for your business. We're also invested in supporting you to deliver exceptional outcomes for your customers. And we're invested in contributing to the industry sustainability by nurturing well-rounded, knowledgeable brokers with robust companies. But what this means for NLG brokers and accountants is you'll be aligned with an aggregator that prioritises support, enables growth, and increases revenue through extending your service proposition, but also boosting referrals and diversifying revenue streams as well.
Okay, amazing. So what I really love about this referral program, and having worked with NLG for quite some time now, is it's the first in market that I'm aware of where there's a formalized program that actually fuses the broking industry and accounting industry to really create those wealth communities that support client outcomes as well as mutually benefits both the accountants as well as the broker. So Steve, I understand that NLG has completed quite an extensive pilot program for this collaboration model. So how long was that pilot for?
In over 3 years, Sasha.
Yeah, because I remember we've been talking about this for a while, right? And I remember when we first started to talk about it, it was really important for NLG as well as the entities that were involved that it was a robust program. And what I particularly liked through this proof of concept is that it's really distilled the various partnership options and the various risk versus reward for each of those. So Steve, perhaps can you just give a bit of an overview just for the brokers in the room? So what are the benefits for brokers through this collaboration program?
Well, okay, for the brokers in the room, the benefits are obviously, I guess you could say it's an opportunity for you to generate, really at essence, it's about having a referral partnership or an opportunity to generate more business and therefore more revenue by servicing really high value clients. When we say high value, we're not really necessarily talking about loan amount. We're talking about the incredible opportunities and incredibly well-placed and positioned customers that accountants provide. And without a doubt, they're absolutely I would say the only thing better than an accountant referral might be friends and family. But outside of that, these are by far the best. So for someone looking to scale their business, it's an absolute no-brainer.
Okay, no, amazing. So I guess the feedback that I've had from brokers in terms of some of the benefits to date have really been, as you were saying, you're diversifying revenue streams, and off the back of that, there's business growth and referral opportunities and creating stickier clients for all entities.
Yeah, correct. Yeah.
And I guess also in reverse, for the benefits for accountants, similar capacity. But I really like that the program is an opportunity to extend advisory services and provide a more holistic solution by facilitating aligned funding. So I think that to me is really the essence of why the collaboration is so powerful. Is there anything else from an accountant perspective that you'd like to highlight?
Yeah, absolutely would, Sasha. From an accountant's perspective, obviously there is the opportunity to extend your advisory services out, better service clients through facilitating aligned funding solutions, diversify your revenue stream, and that also includes building an asset, being a loan trail book, which is really valuable and quite important these days. Support business growth, boost referrals, and of course it does create stickier clients. But you also have a measure of participation within the client solutions as well.
Okay, fantastic. So I know that off the back of the pilot program, you have developed 3 different types of partnership models. And I really like that aligns with both accountants and brokers' resources as well as appetite for risk. So perhaps what we might do is just do a quick synopsis of what those 3 models are, and just maybe if we start by the first, like what it is, and then I might ask you the curly questions of the pros and cons.
Sounds great. Okay, so let's
start.
I suppose we start from, I guess, the traditional referral partnership or reciprocal partnership model that we found. A mortgage broker might have a relationship with an accountant. They're separate businesses, and the accountant refers their clients over for debt solutions. We've found that in the past to be a little bit hit and miss. Would be a good thing, and there's a lot of accountants out there that have had quite poor experiences in that respect. So we've redesigned that, I suppose, and redeveloped it to have a layer of management that certainly helps with providing better outcomes for the accountants.
All right, so let me ask the question that everybody will be thinking. So this referral partnership model is what the industry very much naturally defaults to. How is the NLG partnership different? And perhaps this could be the formalization of the collaboration piece.
Yeah, correct. It is, Sasha. It's really about having a much more formal program with, I guess, really at the end of the day, it's all about people, right? So traditionally you've got a sole practice or sole operating broker with an accounting firm. Lots of things can go wrong, people can go missing, etc. We add that layer of management over it, Sasha, that really does make it quite robust. Like Matt knows, and you'll get to meet Matt later, Matt knows that if there's any issues, he can come to me, he can talk to me, we can work through them. So it's a really important component of it. You're not alone, and the relationship is there to be worked on by all.
Yeah, and I think that, for me and my exposure to industry, that is really the core difference, because a lot of, whether it's aggregators or informal relationships between brokers and accountants, without that measure and without that management, it is hit and miss. And there is, it's difficult to have that sustainability and accountability in terms of different expectations and so forth. So I guess in terms of then the pros, apart from it being a formal program, what's the primary pro of that referral model?
I think you're allowed to, you're, as an accountant, you're able to provide a more holistic service to your clients and get involved in the debt solutions. Not to mention revenue shares and other other pros, but I'd say that's probably the main one, Sasha.
And what about from a con? Why have accountants chosen perhaps not to do that particular model?
It's a great question, and it is so important. Lack of control, a reliance on the broker to be transparent about the deals written and confident that deals are being appropriately managed. Can also take a lot of time and require a significant resource to identify an aligned and trusted broker. I mean, how many do you need to go through before you actually find one that you can trust?
Right. And I guess that lack of control piece is a big one to industry. But for me, it's probably also a good testing of the waters for both the accountant and the broker, and particularly if the accounting firm isn't quite sure whether or not they want to provide funding through a broker. It could perhaps be sort of a safer way to test that process and see if it works for both parties through that vetting process.
Yeah, and look, we are fully aware that not everybody gets along with everybody, and so it may take, even at our level, we may remove a broker and put a more appropriate broker in. It might be, your first one might not be the solution, but we help that, we manage that, and we drive it.
Yeah. So I like to think of NLG in that respect as the professional broker accountant matchmaker.
That's
that's what you are, Steve?
Yep, pretty much. That's really the essence of the role. Yeah.
Perfect.
Yep.
All right. Well, moving on. So we've got the reciprocal relationship or the classic referral relationship. What's the next partnership model?
So the next partnership model is really interesting. It's accountants writing loans directly. So becoming a broker and starting to write residential and or commercial loans themselves, or asset equipment, and etc. So there's, I guess, the sort of the pros of this, Sasha, if I can sort of go into these, is that you do retain full control in providing a whole of wallet solution that substantially increases your firm's service proposition and does deliver really good revenue and excellent asset, etc. The cons are always, it's very labor intensive and does require obviously some education, being a diploma in mortgage broking. You'll also need a mentor that's required to assist with the loan writing process and compliance regime as well. And then you have to be licensed or be part, have a credit license or be part of a group as a credit representative. But yeah, the upside is pretty good.
And I think, it's interesting because it's, to me, the complete opposite of that referral piece. Like this is the piece where if an account is really serious about owning that whole of wallet, then this is the option. And I was actually surprised following sort of the proof of concept phase that there is such an appetite and there is such a growing appetite within the accounting industry to prefer to upskill and to prefer to own this whole of wallet. And I think it definitely is an indication of the progression of where both the accounting industry and as well as the broking industry. So for me, we've got sort of like the super conservative, low risk, and then the like highly invested.
Yes.
So maybe now we've got those two extremes. Perhaps we talk about that nice, happy Goldilocks middle ground.
It is a nice, happy Goldilocks middle ground, and it seems to be something that a lot of firms will evolve to. And that's our in-house mortgage broker solution. So it's about really putting an in-house commission-only loan writer or a PAYG mortgage broker as either contractor or PAYG. And that's either, that can be extremely cost-effective and a flexible strategy to extend the firm's service proposition.
Okay. So in terms of appointing this in-house and the commission only, what are the pros for that?
Okay, so the pros for the in-house, really you maintain full control in providing a whole wallet solution. And that obviously substantially increases the firm's service proposition and diversifies revenue without resource or accreditation constraints. So, there's no time, stress, hassle, or expense of in terms of the accountants writing them themselves. They've got somebody that's dedicated to do that, whether it be on a commission only, meaning that there's no real big investment or risk in that respect, or PAYG, you may have started with a reciprocal relationship, but then thought, okay, we can do this in-house because we've got the volume. You'll look at a PAYG broker and your revenue and profitability really goes through the roof. As for any sort of cons with this, Sasha, there's not really any. It's pretty low risk, especially on the contracting role, as we do a lot of the grunt work in terms of, you know, searching for the appropriate broker and helping setting up the business. And it's really more of a, you stick to your knitting in terms of working with your clients and getting your clients in front of the broker, and then the broker does their role from there, which we can certainly help with that.
Okay, amazing. And, you know, when we were looking to put this presentation together, I was always thinking, okay, so what are the cons? And I have to admit that with that in-house model, like, it just seemed to be, a no-brainer. If an accountant is actually committed to the process, that it ticks all the boxes. But
can I just add one thing there? A lot of accountants feel that they don't really have the volume, but when they look at their broader network and they really get an understanding of who they have influence over, I think you'd be really surprised, and we can support that with additional lead programs as well. Okay.
Sounds good. So rather than just talk about this theoretically, I am going to put Jim from Lending Loop, who's a broker, and then Matt from 10th Avenue, who's an accountant, on the spot. Because what I really wanted to do in this session was to not only just sort of talk theoretically about what we're doing, but also so you can actually hear from the horse's mouth how this works. So Matt, I'm going to throw to you first. So just by way of a brief introduction, so Matt Connell is an accountant and financial planner who's based in Newcastle. His firm specialises in small business and SMSF transactions, and lending is a key component of his remit. So Matt, I'd love to hear from you why you've chosen the reciprocal or the referral partner relationship with Jim from Lending Loop.
I think Steve hit the nail on the head when he said that, you know, a lot of accountants don't have a massive opinion or don't see a massive pool of work from lending, but we identified that it was certainly an important component of our advice to our client base. So we wanted to become involved in the process. So through NLG, they take away the hassle and also the uncertainty of selecting brokers to partner with. And they give us that extra tier of management where if we need more brokers or we're unhappy with the broker potentially that we're dealing with, I can go to Steve and Steve assists us in resolving that issue. But importantly, across our client base, we might go for a period of time and not get any need for lending referrals, and hence have no demand for a broker at all. And then we might come into a period of time like we're coming into now, where we probably need 3 or 4 people to refer to. And so it takes away from us that need for consistency in that particular market, because obviously we specialize in other areas of the client's life, but finance is still an important part of it, and we feel the need to be directly involved in applying for and selecting finance. And that's what the referral partner process with NLG gives us.
And I think you raise a really interesting point in terms of that partnership model can really work with the different stages of your business. So you can either, you know, increase that referral network or decrease it as the workflow permits. The other thing that I found really interesting with your model is that you've set up such a strong virtual presence from day dot. And initially, when I was considering that referral partnership, I was thinking that initially it might need to be sort of more in that face-to-face or in the same office environment. But I know that you, Matt, you've done that really successfully and really well in more of a virtual capacity.
Yeah, so we have a very strong preference on dealing with our client base virtually. given the last 2 years, that's probably not such a great surprise to anybody.
But you were doing that beforehand, I think you were saying.
We were. We
Yeah.
have a diverse client base over the whole of the Central Coast and Hunter Valley. So to individually meet with all of our clients face to face is not practical. And so we will do the nuts and bolts of most transactions virtually. So we have all of our accounting software, all of our financial planning interactions, everything is geared towards it being 100% virtual, and we have those face-to-face meetings when appropriate. And
Yeah.
so that allows us to maintain the footprint of our business, but also to maintain a very strong relationship with our clients as well.
Okay, great. And then from your perspective, Jim, being the broker that Matt's referring deals to, I know that you mentioned that you receive sort of quite regular referrals from him. How do you feel that benefits you and your business?
Well, it's an extra source of revenue, obviously. It's more work for me. Matt's referrals are generally pretty strong, which is good for both of us. And when he refers, well, I help his clients by finding the right solution. We can determine which lender we should go with, what the client actually needs as far as lending goes, and find the appropriate solutions for Matt's clients to keep them satisfied that we're working to the best solution for them.
Yeah.
It's beneficial to both of us from a revenue point of view, but it's also beneficial to Matt's clients that they're working with someone who's fulfilling the need that they're after.
Yeah, and I think you raised an interesting point that the quality of the lead, the vetting of the lead, and the specific type of finance, I expect would be expedited coming from an accountant's perspective, opposed to the regular due diligence that you'd need to do for a lead. Yeah,
well, obviously it's helpful because it's a strong lead because it's coming directly for them from the accountant.
Yeah.
And it allows you to work well with the client, knowing that the accountant has referred me to the client, which gives a level of trust to the client. Yeah, absolutely. Absolutely. Well, thank you both for those insights. I might move forward to Moyan. Just to recap, so Moyan Khan has a chartered accountant and tax agent business in Sydney. He services multiple industries in the Greater Sydney region, and he has chosen to become a broker as well. Hats off to you, and is now doing sort of about a 50-50 split of residential and commercial transactions. So I'm really interested, Moyan, why you've chosen to proceed with this option.
So Sasha, in the middle of the pandemic, I was forced to reevaluate my role in the lives of our clients. To some extent, I realized that many of my clients were dependent on me for financial advice, tax advice, given that there were a lot of pandemic grants that the government was handing out at that time. I found that my role had changed from being a number crunching accountant to more of a financial advisor for them. So at that time, I met Steve and realized that there's no one better placed to fast track loan applications for my client that reflect the economic reality of the client. So it was an eye opener for me when I met Steve. So as an accountant with years of experience, obviously the fundamental challenge of any accounting practice is attracting new clients. I realized in my case, the best way to attract new clients were through my existing clients, which would be my best leads. Anyone with a mortgage was a lead for me, and there was no need for cold calling, and it came at no extra cost. From a firm's point of view, it also enhanced the firm's reputation. And it was just a smoother way for me to acquire new clients, drive up the profits. And especially because I know my clients well, I know their business well, so I know why the profit and loss, for instance, is up and down, or why if they have acquired a different asset, the profits would be low. So it was easier for me to explain that to the bank. And it was a win-win situation because it was less of a hassle for the client as well to explain that to an external mortgage broker, while as I had in-house knowledge about the client. So this was the main reason why I got into mortgage broking myself.
Yeah, I think it makes total sense. And how did you manage that from a resource perspective in your firm?
So in the firm, we had a few staff members that I also got into mortgage broking. They had to undergo vigorous training in the front. All of us had to complete a diploma in mortgage broking. It took about 6 months. We had a 100% pass rate. And then we attended seminars, training courses to get a feel of how it works in practicality. We hired some more staff to work on the accounting side, and then I moved some of my accounting staff onto the mortgage side. So we preferred staff that has accounting knowledge to manage the mortgage side of things. And then we started writing loans in June. That's when we qualified. And currently we're working on about 30 to 40 different leads that we have. We haven't really fully advertised our service. Most of our leads have been coming through the tax work that we've been doing currently for the 2022 year. The plan is obviously to make the mortgage broking arm pretty much as big as our accounting arm. Initially, we do, starting out, we do need to plan for inefficiencies, both in accounting and mortgage broking branches, because in the short term, it takes a hit until the clients, myself, we get acquainted to the new line of work. But I think, we're getting there. It is a high pressure, but obviously is also a high rewarding job doing mortgage, writing loans.
Yeah,
and
amazing.
The pandemic was a real eye opener for us, to be honest.
Well, I think you're the poster child of looking at your business and looking at how you can evolve it positively. I really like the notion, though, that you do have such visibility and such transparency on a customer's business or customer's profile. And I can imagine also, particularly when you have SMEs or small businesses within your database or your client network as well, it does allow you to definitely offer a completely different service level and create even stickier clients. Do you have an example where previously, you might have had a client that you just did, a straightforward tax scenario with, but now through doing brokerage, you've been able to sort of further your relationship with?
Oh yeah, I do have multiple examples. One of the examples I'll give you was a client of mine who had acquired some assets, so their profit was low because they had written those assets off in the financial year. So they were discussing it with an external mortgage broker. I wasn't aware, but they were unable to get a loan. So they came to me and I had a look at the profit and loss, and the loan went through pretty quickly because we understood what their situation is. Some of the clients, mainly who are in, say, a building and construction industry, they have the profit and loss will be pretty low one year, higher the other year. So we can explain that to the banks. Smaller clients that we have, simple individual tax returns, they all have mortgages. So it's just an extra stream of revenue for us. Something that we would charge maybe $200 on a tax return for. On the mortgage side, we could charge them maybe $5,000 or $6,000. So it's an extra mortgage. And plus, the clients are stickier as well. So it's a one-stop shop for all their mortgage as well as accounting needs. So I think accounting and mortgage broking really go well hand in hand. So it's been great so far. So we're still learning, still getting into it, getting started, but it's been pretty good. And we've got, Steve has been very helpful and very kind with us. He's been helping us out. So it's been great so far.
Okay, amazing. Well, thank you so much for that. We might move on to FinCare. So we've got Brian Willett, who is from FinCare Finance, who is an accountant and a financial planner. And he has hired an in-house broker, Lauren Marsh, to facilitate the firm's financing. So in terms of the firm, FinCare is a growth firm. what was it? I love this. It was voted the best professional firm and best small business in a local region in southern Sydney. It has offices in New South Wales and Queensland, and predominantly does home loans for small business owners. So Brian, we might start with you in terms of why you selected this partnership option and how this has contributed to your growth strategy.
Sure. We originally started, and when the firm was smaller, we did use the referral arrangements. The reasons that we moved away from that was having the control. We'd go to a broker, and you might use an external broker who gets busy in their own work, and all of a sudden your work was maybe not as high a priority, or so we could control the full experience and manage the process. And then really when we brought Lauren, who's been an expert with a strong background, it wasn't a matter of retraining. We had utmost trust in the work that she would be doing, and being in-house, she understood our culture, FinCare, the caring culture that we have. So she's been a part of that. She's a part of our staff meetings. She knows everything that's going on in the place. So it just became a very integral blend for how we were working. One of the other things that comes through, that everyone's busy. So, and as Moen said, and no disrespect to Moen's situation, but I didn't have time to retrain to do the course. So it meant that we brought somebody in who's already got that history and background and could just start working with the clients. So it's been a very, very successful move for us. I think it was 3 years now that we've been working with Lauren. And yeah, I think the real value comes down for us versus a referral arrangement was when it comes to time, if you do tax planning for a client, in certain ways you'll do tax planning will jeopardize a person's potential to maximize their borrowing. So to have Lauren working hand in hand with the accountants and just discussing their situations, etc., so that we as accountants aren't jeopardizing the client's potential borrowing. And Lauren is working with the accountants all the time. She's flat out around that tax planning time to make sure no one falls foul of what they should be doing.
Yeah, and I think that that's actually a really interesting position, because I've heard that on both sides of the fence, where accountants are obviously in the tax planning process looking to potentially minimize or maximize profits for whichever perspective, and then it has the complete reverse effect on trying to secure finance. So it is that tap dance. So I think that for the small business customers in particular, having a broker and accountant working on that collaboratively is really beneficial. So, and I know, Brian, that we talked to a little while ago about sort of the hard benefits of this arrangement, as well as some soft benefits. So I was perhaps wanting to just explore what your thoughts were of the benefit to your business from both those sort of hard and soft perspectives.
Yeah, absolutely. So the hard ones, obviously the revenue, the extra side to the business. But the clients who, if you have a client who's working with you as an accountant, as a financial planner, who has their loans with you, who has their leases with you, who's using our general insurance arm, it's a very, very sticky client. So, not that we have problems with client retention, but it really makes it a very complete service package for the people and the clients. So that's one of the softer benefits. The other hard benefits, I think, a client of mine, totally unbeknown to me, was talking to Lauren. He then referred Lauren a home loan client. So he's totally external to us, but he's talking to a friend who needed a home loan. That goes to Lauren, then Lauren starts talking to us and brings that client back in as an accounting client. So it's just an extra service arm which stands on its own, but also is a part of the overall group. So it gives you that both ways.
Yeah, no, excellent. And Lauren, what about from your perspective? What appealed to you about this partnership option?
I think I was working in a smaller business where I probably wasn't seeing enough clients. We were struggling to get referrals. You were working sort of against accountants rather than with them because you weren't working together. So for me, just the opportunity and the client base and coming in and having all those leads and clients that want to talk to you, and they're warm leads because they're coming from the accountant. Everyone trusts their accountant. The accountant says do it. Normally they do it. So that for me was my big selling point.
Yeah, and I know that when we were speaking recently, you were saying that, you know, you've really learned a lot about different areas of tax and so forth, which you felt was quite beneficial.
Yes, lots of complex tax structures that I'm starting to get my head around now. So that is just constantly working in an office with accountants, and we're working together. So whether it be like their tax planning and we're loan planning, or me just saying, I don't understand this, and then going through it with me, just having that better understanding of it before it goes to the lender and making sure that, you know, it's going to be successful rather than it going there, you're only half understanding, and then there's all these questions, there's a lot of back and forth, and it just makes the process a lot smoother, quicker, less painful.
Yeah, indeed. And just, I might just segue for a moment. I've had a few questions come in, which we will definitely address towards the end of the session. But please keep those questions coming either in the chat function or through the Q&A section, and we'll get to that at the end. So Lauren, just back to what you were saying, can you give an example of where you've sort of seen an environment where you feel that the client has benefited from this structure, perhaps either coming to you directly or through Brian and his team, where this is, you know, it's been more efficient or whatever the case may be?
I've actually had a lot of clients in the lead up to tax time, and when we're getting close to tax, that the accountants may have referred, or we've had a mail out and they've come and said, okay, I want to do this. And we look at the income and we're like, well, it's not quite there yet, but we're getting close to that end of financial year. We'll talk to the accountant, we work together, we're working towards the same goal. That's probably the biggest thing, like you're working together to get that done for them. So that happens a lot. So that would be the biggest for me.
Okay. Thank you. Well, what I might do is we might start to go to a Q&A section, and I've got two sources that the panel may or may not be able to see. So Matt, I'm actually going to direct this to you because it was an interesting, and Matt's like, what? We're going off script right now. We weren't prepared for this. So one of the comments that I've actually come in, which I hadn't actually considered, which I think is actually quite interesting, is someone anonymously has noted that, and please correct me if this is not the case, that Brian is a financial planner and so is Matt. And the preferred model with that financial planning seems to be to either have a referral or someone in-house. Whereas Moen, instead of focusing on that financial planning, you've chosen to pursue broking. So Matt, and I'll open this to the three of you guys in a minute. From your perspective, being a financial planner in addition to an accountant, does that affect your decision making in terms of what type of partnership option you'd prefer?
Look, absolutely. I mean, from a selfish perspective moving forward, I've got to do PD each year in accounting and financial planning, and I don't know that I was overly motivated to do PD and mortgage broking as well. But I think I also felt that we wanted to bring someone into the business that was a specialist in that area, referring to mortgage broking. So upskilling again to have a third speciality wasn't really our goal. We wanted to bring someone in who was specifically in that role and wasn't trying to wear multiple hats, whereby we could conduct our advice relationship with the client, and then where specifically they needed to speak to someone who was doing a lot of loans, as far as what lenders to go to, how we structure the loan from full doc to low doc, or everything in between. They could go to that person who actually held that area of speciality and brought with them many years of experience. That's what we were looking for. And so, you know, I go and upskill again. Yes, I've had a lot of experience advising clients with loans and whatnot, but I haven't written the loans. I don't have that experience. I don't know what the relationship may or may not be with 20 different lenders. That was what we wanted to bring Jim into the business for.
Yeah, no, it makes sense.
Mm.
And Brian, perhaps from your perspective, what are your insights in terms of, has being both a planner and accountant impacted your appetite?
Absolutely, but and I agree with everything Matt said there. From our very early stages, my business partner had actually left the accounting industry and worked as a mortgage broker. So I came into the business with accounting and financial planning. He came in as accounting mortgage broking. However, the business got so busy so quickly that he never had time to do the mortgage broking. So he just became a full-time accountant and helped run the business. And so from my point of view, yeah, wearing 3 hats would be way too much. 2 is a challenge.
Yeah.
And really having a specialist who, as Matt was rightly saying, is, you know, knows what's going on, because they're just dealing with it all the time.
Sure. Okay. So Moeen, I might throw to you, because I'm sure you've got a completely counter perspective, which I love how, you know, all the different reasoning and rationale. So from your end?
So Sasha, to be completely honest with you, when I was looking at, business expansions, I was looking at mortgage broking and financial planning. Financial planning was entirely like, it's a different ball game altogether.
Right.
Mortgage broking, I realized that we have pretty much 90% of the information to complete a loan. So we just need to tweak a few things, do a few more meetings, and then we're up and ready to go. So when I thought that we have 90% of the information in-house, to get that extra 10%, we won't be working as hard as opposed to, getting a new client and doing it again. So I thought, let's just try it out ourselves and see how we go. And that was pretty much my, that is why I got into mortgage broking, because most of the information was available to us. And it's just like a few little things that we need to ask the clients. And then pretty much we're ready to draft a loan application.
Okay, fantastic. Thank you. Well, Steve, I might go to you. And so we've had sort of quite a philosophical question come in, and now we've had a very technical question come through. So I'll just read that out to you. So we've had a question come through that states, in a referral arrangement, I've noticed that brokers are getting less commission than under the accountant's client versus their own clients. How do you address this issue? So perhaps just give context to that to start with.
Yep. Okay. So generally there's a revenue share arrangement when we get a client referred from an accounting firm, and that could be anywhere from, our general split is 20% of the upfront and 50% of the trail. So it's quite a significant chunk going to the referral partner. And I guess, if they're getting their own client, if we compare the apples and the oranges, with their own client, they may get 90% of the upfront trail or thereabouts, so 85. For the accounting one, they might be getting 60%, let's say, for argument's sake, and a small portion of the trail. So yes, there is let's call it a revenue differentiation between an accountant's client and their own. Now, how do we address this issue? As bluntly and simply as I can possibly state it, it's all about the person. I know from working with Jim that Jim, he's contracting, he receives multiple referral channels from us with different revenue streams. Never once have we had an issue where Jim's put something in front of something else because of the revenue. And that's purely because Jim is there to look after the client. Now, Jim's smart, and Jim knows that if he does a really good job for your accounting client, that client's likely to refer their brother. And if that brother's not connected to the accounting firm, then that becomes Jim's client and goes on to his own revenue stream. So Jim has an opportunity to increase his client base, if that makes sense. But he can only do that if he's giving your clients great service and prioritizing their loans. Now, it really just comes down to anybody that is going to prioritize a certain person, and let's take it right back to what it is. We're dealing with people here that have needs and wants. If a broker is going to prioritize somebody because of the revenue they're getting, they're not for us. And I suggest they're not for you, because if they do that in one respect, they're going to do that in another respect. And that's probably the simple answer, stretched out a bit.
And actually, on that note, what we will do tomorrow is just circulate an email through to everybody who has registered, just with the option to connect with Steve and to have a bit more of a chat about the semantics of the various structures and all of the nuances, which are quite detailed, but as Steve said, are very upfront as well. So we might actually wrap at that point. So I just wanted to thank everyone again for both attending today, as well as our fantastic panel for coming together and for the time that you've spent with us to really share your insights. So thank you so much, Steve.
Pleasure. Thank you, everybody. Thanks, Brian, Lauren, Matt, Moeen, Jim, and thank you, Sasha.
Lauren and Brian, thank you so much. Matt, thank you. Jim, thank you.
Thank you.
And Moeen.
Thank you.
Thanks so much, and have a great rest of your afternoon.
Thank you.
Thanks, everyone.